Tuesday, April 7th, 2020, Maneco 64, home of alternative economics and contrarian views. On March 26th, I made a video comparing the Dow in 1929 and the Dow in 2020. You will see that I said that we could see the Dow rebound up to 24,000, maybe a little lower or a little higher. And it seems that it's what we're doing right now. It is, in my opinion, a sucker's rally. What's a sucker's rally? Well, it sucks in everyone into it, and then suddenly it shifts and goes back down, the stock market. So I'm going to talk about that this morning. And the markets, of course, see where they are. And before I go on, I'd like to say that you can find these kinds of mugs and the Fed mugs and the Bank of England equivalent mug, which is time to retire the old lady of Threadneedle Street and shut the bank's doors. I've got NDECB mugs. I've got Billy Airways mugs and t-shirts and sweatshirts. What is Billy Airways? Well, a few weeks ago on a live stream, we were chatting about all the possible bailouts for airlines. And I said, I think that's wrong, that the taxpayers should fund airlines. And I said, we need to start our own airlines, Billy Airways. And one of the viewers said, well, you should make a t-shirt and it should say flying with a silver lining. So it's got that on there. And I also have the comment saying that it's funded by real capitalists and not the taxpayers. So have a look. It helps the channel a little bit. So let's quickly look at the markets, and then I will segue into the comparison between 1929 and 2020. Probably be a little shorter video today. So it's 8:39 a.m. London. So yesterday, yeah, we had a big rally in the stock market. The Dow rallied 1,627 points, or 7.7%. Some people say, wow, that's a great sign, we're back. No, I think it's actually a bad sign, because we're seeing days where the Dow will drop that much. We're seeing days where the Dow will go up that much. So I don't really think that's a good sign. Overall and longer term, S&P was up 7 as well. So you get the idea. The markets rallied very strongly yesterday. This morning, as I speak here, we've got gold and silver, which rallied really strongly yesterday. They're still fairly firm. Gold is down slightly. It's at 1655. It has been as high as 1679. I think it's only a matter of time, and it could be this week until we break through the old high just above 1700. Silver actually has been outperforming. It has been as high as 1555 this morning or overnight. Right now it's at 1523, up 28 cents or just under 2%. Unfortunately, this is a time when Europe starts coming in. BIS is back to work in Basel. We've got the Bank of England manipulators coming into the market and the bullion banks, and you can bet they're going to try to manipulate things. You've got JP Morgan London as well, probably dealing for the US Treasury. I made a video months ago talking about how back in the early 2000s I saw a photo of Jon Snow, the then Secretary of the US Treasury, visiting London, and there's a story about it in one of the papers at the time. He was visiting the dealing room of JP Morgan in London. And why did he do that? Well, because the ESF fund from the Treasury, they deal through JP Morgan, and they will deal through JP Morgan not only in New York, but anywhere around the world, and especially London. For many of you who don't know, the origins of JP Morgan Bank are not in New York, but in London. The suckers rally continues this morning here in London. The Dow futures up 570 points, or 2.5%. S&P 500 is up 2.25%, and the Nasdaq 100 future is up 1.85%. So why are the markets rallying? Well, maybe because they were oversold a little bit technically. Maybe because a lot of the bad news in relationship to this health crisis have gotten out of the way, and now there's a bit of optimism, but I'm not convinced technically. The crisis itself, I don't know. I'm not privy to what's going on, and yeah, I think there's a lot about this crisis we don't know. But that's a subject for other discussions. I recommend people go onto londonreal.tv and watch Brian Rose interviewing David Icke yesterday. It's a must-watch interview. I'll put the link to the londonreal.tv website below. You can go there and watch it. It's a very long interview. Apparently, it's been taken down from YouTube, that interview. First time ever, and London Real has been on YouTube for 9 years. All right, what about the currencies? Well, we're seeing sterling rallying back a little bit. We're at 123.25, up 0.75%. Let's see, we've got XAU GBP, sterling in gold, at 13.43. So the strength of the pound has brought the gold price in pounds down a little bit. Strength of the pound in dollars. I think yesterday we got up to 13.60 or maybe even a little higher, XAU GBP. So gold's still going up quite well versus the pound, even though it's down a little bit today. The euro right now is up 0.2%, 108.65. So as you can see, one day we got these currencies down, one day they're up. As I've said, it's no point trying to hedge fiat exposure with other fiat. Stick to precious metals. The dollar is down 0.25% against the yen, 108.92. Crude oil is up 3%, 29.40, just under $1. The 10-year yield right now is just under 0.75 or 75 basis points. It's up 6 basis points at 74. So yeah, on March 26th, I did this video, the Dow in 1929 versus the Dow in 2020. I'll put it up in the cards below in the description. You can watch that video. It's quite interesting, I think. I use charts to compare the two periods and give my idea of what could happen in 2020 and why I think we are probably in a similar situation as 1929. I think the economic impact of basically shutting down half the world economically for weeks upon weeks and maybe even months has never been seen before. Even in times of war, the economy is disrupted, but at least people are still going out and working and producing things for the war effort. And I guess, unfortunately, there are people out there fighting as well and dying and getting injured. But what we're experiencing has never been experienced before. It's affecting, well, hundreds of millions, if not billions of people psychologically. And even though I'm not a proponent of the Keynesian school, Keynes always said that the government should, with intervention, fiscal intervention, try to revive the animal spirits, people's urge to go out there and do something, and the greed of people, or to act, right? Because he thought a depression always affected people psychologically. They didn't have those animal spirits. And that's what I think we're going to see. And this is just speculation from me because we've never seen this before. We can't compare it to other periods in the past, economies being shut down by the government for so long. So what I think will happen when things get back to normal, there's going to be a lot of small businesses and medium-sized businesses and even big business that are not going to be around anymore. There's going to be people who are consumers or households that have been hit really hard, that are still in debt, they are in arrears. Yeah, they might have postponed your mortgage payments, but believe me, they're not going to write it off. So I think the animal spirits are going to be very low, and I don't think the economies are going to go back to normal as Wall Street and the Keynesian mainstream economists or politicians think. So, and that's why I think this is a sucker's rally. And you'll see in that video that I thought that we could rally towards 24,000 in the Dow. And why is that? Well, because it's the 50% retracement of the all-time high and the low on March 23rd. And that's pretty much what the Dow did in 1929, from its top in September 29 to its bottom, well, interim bottom in November 1929. It rallied pretty much around the same percentage gain. And but then it actually turned around and dropped. And it took a while back then. It rallied up until I think April 1930. So I extrapolated, seeing that the drop in 2020 was much quicker than the drop in 29. I said that the rally could be maybe 13 weeks, but it looks like it could be even shorter because in a couple of weeks we've moved so quickly up in 2 weeks. So it could even be over before the 13 weeks. That's the only change I would make. So there you go. I think it's a sucker's rally. I don't think the technical picture looks good for the market. And I think fundamentally going forward, yeah, the economies will reopen, but we will have lost our mojo or our animal spirits. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to the channel if you haven't yet. And you can also follow me on Twitter, Facebook, BitChute, and Steemit. I wish you all a great day. Take care. Bye.